please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
What are global investors doing? Jonathan Schiessl of Ashburton joins in now. Jonathan, good morning and thank you for taking the time out. What's your view on India now after the recent underperformance that we've seen versus global peers?
I think it's I guess versus other emerging markets, India has been quite frankly underperforming for some time. I think obviously, the China-related factors have been clearly keeping most commodity complexes and the energy prices reasonably buoyant, which has certainly helped some of the other emerging markets that are more geared into those sort of prices. More recently, however, there's no doubt the macro situation on India on a relative basis has certainly taken, in the short term, a turn for the worse. Obviously, concerns over the budget that we saw, which I guess were neither too hot or neither too cold, I guess, in most people's opinion. And then obviously more recently, this fraud case sort of adds to the worries over the recovery in the crucial PSU space in the banking sector. So with all these factors in place, and then even you can talk about things going on, for example, in an emerging market like South Africa, where you suddenly seem to have some political change as well. And India, which previously was fairly unique amongst many emerging markets where you did see political change and reform, that could be happening elsewhere now. So perhaps the relative attractiveness of India has dimmed somewhat and people are putting money elsewhere in the short term.
So would that be your call as well, moving money out of India to other EMs? And if that's the case, which markets would you prefer?
No, we're still very much overweight India. I think, we go through these phases from time to time where things do look a little bit bleaker. We're still very optimistic on a medium to longer term view. I think some people out there perhaps would hedge India exposure with another emerging market, which could be, say, Russia, which has more oil-related focus. So, it's the sort of yin and yang approach. But we're still fairly optimistic about the India story, about where it's going. But there's no doubt in the short term, it's facing a few headwinds.
Jonathan, good morning. You also handle the China-India fund, where you have 52% weight on India. Right now, which market is more attractive?
Yeah, so we have various indicators for allocating between both markets. They've been a little bit choppy more recently. There's no doubt that the China side seems to, it's obviously a bit further advanced from a cyclical perspective than India. And earnings expectations are certainly very optimistic there as well. I think one of the key differences, though, with China vis-a-vis India is the likes of the Tencents, the Alibabas, the Baidus, the big e-commerce plays that you can find widely in China that India just doesn't have. So I think certainly some investors who are focused on those sort of areas would be bypassing India because there is, quite frankly, no comparison that you can find in India, which you can certainly find in China or even the US, for example. So at the moment, I think most of our models, they did go negative on China recently. They've gone back to being slightly more neutral to optimistic. So I think probably for the time being, we're still quite optimistic on China versus India. So we'll be slightly overweight China versus India currently within that fund.
Okay, that's interesting. So China is looking a bit more optimistic. I want to talk about specific stocks because you recently entered into PSU banks and invested into SBI in a very big way. We've seen a huge fraud, people talking about the possibility of a credit crisis post what happened with PNB. Would you worry about that?
We relatively recently went into State Bank of India for the first time into a PSU bank since the fund was launched, actually, over 5 years ago. And the view there was, it was basically on the back of the government's recapitalization. We have stated at the time that certainly if you look at management quality and general operating quality and all the ratios of private versus public banks, there is a yawning gulf between the two of them, and that hasn't changed. State Bank is clearly the best of the pack, but it's a pack that obviously with the news that we've just heard over the last few days still has a lot of work to do about improving risk systems and pricing risk correctly. So at the moment, we still think it's actually a good time to be looking at financials. I think clearly this sort of news doesn't help in the very short term, but certainly if banking stocks continue heading south, we'll be looking to probably add to our positions as opposed to selling them.
Do you think there is a high possibility of a big correction in Indian markets in the near term? The market has corrected, what, 8% from the all-time highs?
Yeah, so I think the market was, after the runs we've had, particularly in some of the mid and smaller cap counters, the market was very prone to a pullback. I'm not sure we'd be looking for a big pullback, a sort of 15 to 20%, but certainly, anything 10% or in that sort of region would be within expectations. The market has certainly re-rated, but obviously what we're waiting for still is that earnings recovery, although obviously the last quarter's numbers look pretty good. So I'm not sure a full-on bear market correction is warranted just yet for where we are in the cycle. But certainly a decent correction, I think, would certainly make, from an investing perspective, there's a lot of counters there that look quite pricey, and we've been following them for some time, waiting for opportunities to get in. So, we wouldn't worry too much about a correction, but I don't think we'll get a massive one.
Okay, talking about quality names which have corrected, you've liked in the past auto ancillary stocks like Motherson Sumi and Endurance Tech, and they have also corrected a bit. Would you want to buy the dip?
Yeah, so clearly, Motherson, another counter which has traditionally over the last fairly long period of time delivered very good returns. Obviously, the numbers were a little bit light, and you can point to various factors for that. We remain optimistic over the medium to longer term with that stock and the quality of management and where this company is going with their product sets. And I think we're still very excited with that. But the stock had run up quite considerably, like a lot of these other stocks as well. So I think that's the trouble. There are quite a number of counters in India today which were certainly priced to perfection. And unless the results came through to justify those valuations, they are in the short term, there is some risk of a fairly significant sell-off. I don't think, so Motherson's come off quite a bit in the last few days. I would certainly think, some people will begin to get more attracted to the counter down here. But yeah, I think it's more of a systematic issue with a lot of stocks that have just run up too fast.
You have also expressed your interest in sectors like aviation. Any other interesting stocks or sectors that you have bought into recently?
Yeah, so for us, we're still we're reasonably keen on a number of stocks and sectors. So from a sector perspective, as I said earlier, I think if we did carry on seeing this sell-off into financials, we'll be looking to add to financials. And I think even, some of the metal stocks have come off over the last few days as well. I think that's another sector which had run very hard, could do with a bit of a sell-off, and that provides good opportunities for going back in. So, one of our recent additions has been Indigo, and that's done reasonably well for us. When you're trying to find structural growth stories in India at a reasonable valuation, it's very, very difficult to find them. And you do get them every now and then, and you tend to find that it's always a good time to pick these names up into volatility. So that's why, to an extent, we welcome a bit of volatility, because then we can access some of these counters at valuations which you struggle to get hold of. But yeah, our last major addition to the fund was Indigo Airlines.
Okay, well, let me focus. You spoke about metals, but have you taken a good look at the big Tata Steel move to buy Bhushan Steel's assets? Does that make Tata Steel attractive?
Yeah, we looked at Tata Steel some months back. We didn't pull the plug on it. We ended up just buying Hindalco. Obviously, slightly different story there, mainly obviously aluminium and copper focused. We looked at the steel companies in India. We found them quite attractive. The one thing, if I'm honest, that put me off at the time, I guess we started looking at this over a year ago, was the restructuring of the European operations. I mean, clearly, from an Indian perspective, most of the companies are operating at or near full capacity. The economy is certainly gaining a bit of traction from an infrastructure perspective, and yeah, the steel sector looks very attractive. It's obviously, it does seem on the face of it that Tata Steel seems to be willing to pay up to gain those assets. So it's quite aggressive bidding. So I think, and obviously we saw the stocks off quite heavily. I think we'll keep an eye on what happens to the price action over the next few days and maybe take a view.
Okay, this is one question we ask you every time. The stock that's made you most money, Eicher Motors, has corrected 11%. Would you buy the dip or look to rotate into other names?
Yeah, so I think that there is some of that going on. I think that, I guess the question really is, you do have these wonderful structural growth stories out there, and certainly Eicher Motors has fitted into that category, as well as quite a few other stocks out there, and they tend to trade at a very premium valuation. I guess investors, if you are getting more confident that this economic recovery will actually broaden out, that will pick up steam, I guess investors therefore have been looking for a bit more cyclicality, and you can pick up the more cyclical stocks for a slightly cheaper valuation. For us, we have been doing that actually. We have been selling out of some of our more structural stories, and shifting into those cyclical names. But I think what we wouldn't be doing is selling out of all of them. So we like to have a balance at the moment. So some of the structural names, in combination with a few stocks that give us that operational leverage or operational gearing to an economic recovery.
Okay, so since you are in a mood to talk about a lot of stocks, what have you sold and what have you bought recently?
Yeah, not that recently, but I guess over the last sort of year to 6 months, we've sold Whirlpool of India. That obviously you could classify as one of the structural sort of stories. And yeah, as I said previously, we've added to the likes of Hindalco and a couple of the other infrastructure plays where valuations were significantly cheaper.
Okay.
Okay.